And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. It is Thursday, March 23rd, 2023. Welcome to the Market Prep. I am JD, once again filling in for Hogue, who is having some construction done at his house. Couldn't quite get his equipment set up today, so I'm here with you today. Thank you for joining me. Yeah, I'm sure you've likely heard Hogue talking about this all week long. He's getting floors done, setting up a new home office. He's got quite a big project going on at home, so hopefully he'll be back tomorrow. If not, maybe I'll see you again tomorrow morning. As always, thank you for choosing to spend your time with us. Our goal here is always to apply accurate context, sound risk management to the markets. Remember to hit that lucky like button. Feel free to share your comments and questions and feedback in the chat. We appreciate and encourage all forms of feedback. If you haven't already, go ahead and subscribe to our channel so you get those excellent, wonderful notifications every time we go live. So as far as today goes, I'm sure you were all here yesterday for the Fed announcement. The FOMC, which is the Federal Open Market Committee, which consists of a group of Fed bank governors and the Fed chairman, had a scheduled meeting, after which announced that they'd be raising interest rates by 25 basis points, taking the Fed funds rate from 4.75% up to 5%. There is still some talk of more potential rate hikes later this year, but those will be contingent on the state of the economy and increased inflation. The effects of increased inflation, I should say. Let me just take a quick look at the chat, make sure everyone can hear me. Good morning. Excellent. So for today, the economic calendar, we have a number out already. Weekly jobless claims. I'm going right off of MarketWatch here. Number just came out 20 minutes ago. Jobless claims dipped to 3-week low of 191,000. Here's a quote, like I said, directly from MarketWatch. The number of Americans who applied for unemployment benefits last week slipped to a 3-week low of 191,000. There was little sign of erosion in an uber-strong U.S. labor market, even as the economy faced fresh strains. That is what is likely holding us up this morning. Stocks in the U.S. are up about, S&P's up about 0.5%, NASDAQ's up just about a little over 1%. More reports out today. Chicago Fed National Activity Index, current account. New home sales at 9 o'clock Central Time. EIA natural gas report at 9:30. A slew of Treasury note and bill announcements. A couple of auctions later this afternoon. 10-year TIPS auction, 8-week bill auction, and a 4-week bill auction. And Fed balance sheet rounds out the day at 3:30, right around the close. In the Top Step store. I don't have that link handy right now, but maybe I will do a quick search for that in just a minute. I'll get you the link to the. We got a whole bunch of great new swag in there. It's pretty impressive stuff. Our graphic designer did a great job putting our new gear together for us. What else is happening? Overnight, markets in Asia closed a little bit mixed. Shanghai Composite up 0.64%, the Nikkei closed down 0.17%, markets in Europe right now trading all in the red, trading lower. DAX is currently down 0.31%, the CAC is down 0.27%, and the FTSE is down 0.75%. Oh, I turned my mic Uh-oh. Give me 1 second. I'm going to switch over here. How's that? Sound better? I switched over to the, it looks like my microphone died. I switched over to webcam audio. Give me a thumbs up if you can hear me now. Got it? Excellent. I will start that little rant over. Markets in Asia closed a little mixed last night. Shanghai Composite up 0.64%. Whatever I touch, fix it. Yeah, like I said, I switched over from my microphone to a webcam microphone. So, all set. Shanghai up 0.64%. Nikkei down 0.17%. Hang Seng up 2.34%. Markets in Europe closed all lower last night. The FTSE down 0.74%, DAX down 0.28%, and the CAC closed CAC closed down 0.26%. This morning, markets in the U.S. are trading. I'm just looking at my futures charts here. Trading a little higher to start the day today. VIX is right at 21.38. The yield on the 10-year note is at 3.51%, and the U.S. dollar index is at 102.44 this morning. I'm going to take a look in the chat right now and see how everyone is doing. Thanks for the heads up on the audio, everyone. Good morning. Hegel Matters, first in the room, Bill Phillips, Shai T, John Burnell, Urban Cowboy, Jason Lewis, Travis Chingo, Jorge, Snowflake, Vince, Pete, Fred Decker, always a pleasure to see you, Fred. Marcelo, Sarah Hall, good morning. To you also, Ashraf, Sujit, JD Royalty, love the name, Jack Nicholas, Shaw, Les, good morning, everybody, thanks for being here. Like I said, Hoag's got some construction going on. He'll be back likely tomorrow. If he's not, we'll give you a heads up, and maybe I'll be joining you again tomorrow morning. Yeah, he's just doing a little construction on the house. He's looking forward to seeing his nice new office. Should be pretty impressive, all the work he's putting into it. Well, let me queue up some charts here, and we will dive into the markets. So, just in case you've never joined me for a market prep before, I do sort of an abbreviated version of what Hoag does. I'll cover the S&P, the NASDAQ, crude oil, and gold. I don't dive too much into natural gas or the 10-year much anymore. I watch those markets, I track them, but I do not trade them. So I won't talk about them like I'm actively participating in those markets, because I'm not. So I will speak to you about what I do actively trade. These charts I keep pretty simple. We have our weekly kickoff levels. Those are the two solid black lines. A handful of moving averages. The light blue here would be our simple 200-day moving average. The red is a simple 50-day moving average. Blue is a exponential 20-period moving average, and the green is an exponential 10-day moving average. And there's a black line in here too, which is kind of hard to see. That is our VWAP. Down below we have some volume bars and a slow stochastic oscillator, just to give us a snapshot of momentum. I only keep that oscillator on the daily chart. On the 30-minute charts, you'll also see some volume profile. So with that, let's just start getting into it. Pardon me, a sip of coffee. So here is the June contract of the S&P 500. You're all aware we had some big movement yesterday on the heels of that FOMC announcement. The rate hike was expected. We mentioned it in our weekly kickoff email. If you do not subscribe to our weekly kickoff email, I suggest that you do. We put a lot of great information in there. We put the whole economic calendar for the week in there. Some great links to articles that refer to trading psychology, technical indicators, lots of great stuff. Just go right to our homepage, topstep.com, and you'll find a link to sign up for our daily newsletter or weekly newsletter. So, as I was saying, that rate hike was expected. We mentioned it in our weekly kickoff. We could say it was kind of already priced into the market, and then we got this sort of knee-jerk reaction when the actual announcement came out. Overall, the June contract traded in a 108 handle range yesterday. Traded a total of 1.8 million contracts, lost about 2,700 in open interest. Just looking back, this has been kind of a whipsaw type of week. We started out by testing our weekly kickoff low on Monday. Then we ripped higher to test weekly kickoff high and this 50-day moving average up here. Like I said, this is a simple moving average, this red line. Now here we are, right back in balance, hovering around the 10 and 20-day moving averages. It's this volume pattern down here that really catches my attention, though. So we see we have the steadily decreasing volume as prices are slowly moving higher. To me, this is just a textbook signal of weakness. If you're trying to fade this move higher yesterday, you certainly had a few nice low-risk opportunities to enter at both weekly kickoff high and the 50-day moving average. For today, though, typically, historically, we see a slowdown in price action after a big move in the S&P, especially in the S&P. So I'm going to use this 20-day moving average right here, this blue line, as sort of our line in the sand and look for opportunities maybe to get short in this market right around here. Let's take a look at our 4-hour chart. Here is our 4-hour chart. You can see we spent a fair amount of time dancing around our weekly kickoff high earlier this week. Looks like a lot of traders are just waiting for confirmation of that Fed rate hike, or maybe waiting to see if they would surprise us by holding rates unchanged for now. That obviously did not happen, though. I just checked in the chat. Fred Decker Hogue said he wanted to be long. Well, I'll get to that question in a second. Let's finish up this. Let's finish this up. Where were we? Oh, the Fed rate hike. Maybe waiting to see if they would surprise us by holding rates unchanged. That did not happen. Then we had this sort of rip and dip in this bar right here. This morning we've recovered just a little bit. We have a nice pattern of higher highs, higher lows going into today. Personally, I don't have a lot of faith in the integrity of this little move higher right now, though. Like I said, I'm coming out looking for low risk opportunities to short this market today. We'll see if I'm right in a little while. I'm not falling in love with my bias, obviously. But that's just how I'm feeling looking at the charts this morning. Here's a look at our 30-minute with the volume profiles. This right here, this red bar right after the announcement, this is why we do not recommend trading around big economic releases. I'm sure we probably had a couple of traders eating dust after this move. Maybe we had a few winners in there, but the likelihood of more losers than winners is pretty high. This is a dangerous move for smaller traders like us. You know, if you got caught in this, you likely saw some slippage with your stops trying to get out. It was just a violent move. Very few upticks on this move down. Very few. We took out yesterday's low before finding a little bit of support. I won't say support. I would say we saw some buyers stepping in around Monday's value area low here. Overnight inventory, maybe a little bit long. Currently inside range but below value from yesterday. Again, my early bias is to look for some weakness today. I'm already kind of seeing the spots where I want to test out my bias. This value area low right here around 40.11, around our weekly kickoff high up here, and which is lining up nicely with these 2 points of control from yesterday and Tuesday. I see these as nice low risk entry points. If we If we do head lower on the open, maybe I'd even consider jumping in below yesterday's low. We'll see what happens there. Like I said, personally, my initial bias is to play the short side. But I will do my best to keep an open mind and listen to the market when it's telling me I'm wrong. I'll check over to the chat again real quick. Fred Decker threw something in there. Hogue was saying he wanted to be long above and short below his weekly kickoff high. Yes, those weekly kickoff highs, Hogue does come up with them. He doesn't share his secret sauce with me. But I know he has a lot of confidence in these levels. He uses them as inflection points, or points where, exactly like you said, you would want to be long above and short below. Next question. Also, an open within the late spike indicates acceptance of lower prices. That's a good thought about repair after a big announcement. Bear flag. JT, yes. Take a look back at that does look like a textbook bear flag. You are 100% correct, and it's one of my favorite patterns. You can find some more information on technical patterns right on our website. Just do a quick search in the search bar at topstep.com. We have a whole bunch of stuff on technical indicators and technical patterns. Lots of great information there. All right, let's move on to crude oil. Here is our daily of the May contract. So we are seeing some buying this week. Momentum appears to be pointing to higher prices right now. But it's this volume pattern here. Again with the volume pattern. It speaks a lot to the strength and validity of the move. You know, when prices are moving higher, but there's less and less participation as the rally continues, historically, it's likely to signal a temporary shift in direction, or a shift in direction could be potentially lining up. We also see these daily ranges contracting as prices are moving higher. That's another indication that this rally is kind of running out of steam. In all, yesterday, the May contract traded in a $2.50 range, closed up $1.23, traded about 340,000 contracts, and lost close to 10,000 in open interest. And we saw that selling came in right above our 10-day moving average there. Here's a look at our 4-hour chart. Speaks to what I was just saying. It kind of looks like this rally is flattening out. You see these prices definitely just flattening out. The red line here is our 50 period moving average. It's a simple moving average again. It's converging on these two shorter term moving averages. The green is the 10, the blue is the 20 period. And here's a closer look at volume kind of drying up too. You see over the course of the last 4 trading sessions, this little move higher, just volume is just petering out on us. Here is our 30-minute chart. So these two volume spikes here, I'm looking down at the bottom. These two volume spikes yesterday both happened on up moves. Then right after the close, prices moved right back down into right around settlement, close to settlement from Tuesday. Right now, not much to say about overnight inventory. Might be a little long, but it's been pretty choppy so far overnight. Prices remain in range, inside value from yesterday. Overall, even though I am sensing some weakness in this market, my bias isn't quite as strong as it is in the ES, like I was just saying. So my play today in crude oil will be to stick with what's been working all week. We have this nice pattern of higher highs, higher lows. So don't stray too far from the path, you know. Stick with what's working. Look for the dips, and look to buy some dips and other low-risk opportunities to get long. That's going to be my trading plan for today. That is until, again, the market tells me it's time to not do that anymore. Here is our daily of the NQ, the NASDAQ. at a glance, the NQ doesn't look to be quite as weak as the ES to me. The moves after the Fed announcement, very similar, but prices never took out Tuesday's lows, at least during regular trading hours. And now we're trading right back above the VWAP, just barely, just a touch above our weekly kickoff high. This weekly kickoff high is really holding as a nice line in the sand this week. We've been sort of jockeying around it all week long, and it's been, yeah, sort of our key inflection point, as Hogue would put it. In all, yesterday the June contract traded in a 400-point range with 713,000 contracts traded, and the June contract picked up about, 5,000 in open interest. So even though this market doesn't look to me to be quite as weak as the ES, the volume patterns are still kind of similar. You could see volume tapering off just a little bit here, ever so slightly as prices are moving higher. Then a bit of a volume spike on yesterday's down move, but with a nice little pop in open interest. So let's move on to our 4-hour chart. So we have a nice consistent pattern of higher highs, higher lows again. Starting back here, this is March 13th. Nice solid looking uptrend there. Here's our knee-jerk reaction to yesterday's Fed announcement. And now we've sort of crawled right back above our weekly kickoff high early this morning. If today does turn out to be sort of a banger type of day, which is, I call it a banger day, it's just a low volume, tight range sort of trading day, then I think this is where we're going to see the most jockeying for position, right here at around our weekly kickoff high. This has been a good line in the sand all week long, like I said. Here's our 30-minute with the volume profile. Yesterday's price action, this looks nearly identical to the ES chart, as it should. Grind higher, rip, then a dip. Overnight inventory, maybe just a little bit long. We've traded back through the lower end of yesterday's range, back into this just below our value area low here. So there's some confidence in this market going into the open. Again, here's our weekly kickoff high. This is going to be our test zone today. I'm going to look for some low risk opportunities right around our weekly kickoff high today. How does Hogue put it? We're going to do a little fishing below. If we dip below, see what we can catch. That's my plan. And last but not least, let's take a peek at the gold contract. Daily chart for gold. Yesterday, the April contract traded in a 46 handle range, closed up $8.50, and traded about 245,000 contracts, and just lost just over 11,000 in open interest. So what is that telling us? Again, with the volume patterns, I sound like a broken record this morning. Volume patterns, volume patterns, volume patterns. Decreasing volume with increasing prices. Textbook tells us that this could be signaling potential weakness, possible temporary change in direction. This momentum oscillator down here, this is a slow stochastic oscillator, starting to bend on us just a little bit. I'm not quite signaling bearishness, but getting pretty close to it. Does that mean I'm confident enough to fade this rally right now? Not quite, but getting pretty close to it. We're still trading above our 10 and 20 period moving averages, and we have a little strength to start out today's session. Just a little bit of a pop. Let's move right over to our 30-minute here. Going a little long on time. So here's our 30-minute. So after 2 days of lower prices, we had this little hanger day yesterday, followed up by this big late spike here. Overnight inventory, just a little bit long. Open with a bit of a gap. I do think, Travis, I see it. I do I do think volume patterns are important. Overnight inventory, just a little bit long. We open with a bit of a gap. While the daily chart is telling me to start looking for pullbacks, this 30-minute chart is kind of telling me to look for buying opportunities today, at least until we could fill I should say, I'd like to see this gap filled early. If it doesn't fill early, then we're going to start looking for buying opportunities. Overall, I will say we're not here to fight City Hall, folks. Stick with the trend. Stick with what's working until the market tells you that it's changing direction. Keep an open mind trading today. Don't fall in love with your positions. Don't bank on hitting any home runs. For traders like us, this game is won by playing small ball. Keep it tight, keep it consistent, choose your spots carefully, have an exit strategy before you get in. Hey, look at that. Mr. Hoagland, good morning all. Thanks for joining us, John. Great to see you. Hope everything's going good at home. I know Lacey was having some trouble with the having a little trouble with the construction workers yesterday. I hope that's calmed down. The real deal trader, JD, is getting better every day. You know, I only fill in for Hoag maybe a couple times a year, so you do get rusty when you're not on the air all the time. Hoag is a pro. We all learn a lot from him, and I'm lucky to have his confidence to be able to sit in for him when he's out, so I appreciate that. Let's cut back over. Check out the chat one more time, see if we have any more questions coming in. Hoag's hitting the like button. Thank you so much. Well, with that, we've run through our charts. We've gone through the eco calendar. We've run through all the questions in the chat. So I'm going to leave it there. We've got 17 minutes. Check that. We have got 19 minutes before the equity open. Get yourself a cup of coffee and get ready to hit the markets. All right, folks, I hope you have a great day. Check us out later for the Limit Up podcast at 3 o'clock this afternoon. That will be live on YouTube also. And yes, thanks, Hoag. Hit that like button, subscribe to the YouTube channel, and you'll get all those great notifications. With that, I'm going to sign off. Have a great trading day, everyone. If Hoag is not back tomorrow, I will see you. Maybe we'll make an announcement about that later. I'll touch base with them in a little while, and we'll get that figured out. Other than that, have a great trading day, and